We also have Deven Choksey joining us on the show. Deven, let me just begin by giving you an open check and asking you about the stock that you like right now. Any top 2, 3 recommendations that you would like to discuss?
Good afternoon, Anisha. Well, I think the larger amount of preference would stay with the large cap stocks, and also the fact that I think they are available at a corrected valuations, where the fundamentals remain strong, and that is where probably some of the corporate banks, private sector banks like ICICI, HDFC, they remain in the list. Then I think we have the likes of Reliance in the list, largely because of the corrected price that we are seeing as an opportunity. Some of the IT companies in particular are the preference for because of the larger amount of visibility happening for them in the business with a new order intake coming in for a longer tenure. Likes of Infosys, likes of LTTS are the ones I think which we prefer to add into the portfolio. So we love this kind of price correction happening in some of the counters, and that's where probably accumulate some of the bigger companies. The small size companies are relatively more vulnerable to the liquidity-led push in the market, and that's where probably I think we are slightly more concerned. Don't buy the valuation, expensive valuation at this point of time, and that's the reason for which I think sticking our choice to some of the large caps where the growth is more certain and sustainable.
They've been a lot of new paper as well hitting the market. Just wanted to understand what's your thought on JSW Infra if you've taken a look.
Well, I haven't gone into detail, Aisha, about the company, but the fact remains that you are absolutely right. The new papers are hitting the market, and that's going to be the challenge going forward. Many of the companies which are basically quoting at a premium valuation, my sense is that I think investors will probably flip this premium valuation book profits and get into some of the newer opportunities which are coming into the market. Of course, JSW infrastructure is yet to get under our cover, so I think we are not yet gone into details. So we'll talk some other day.
Wait by for your recommendation on that day when you look at JSW infrastructure. But Deven, what's your view on Indigo now? Because on one hand, you have, of course, the other names which are losing market share and Indigo is going to gain that. Then the crude prices are elevated and perhaps a lot of analysts are saying that the best was already baked in Q1 and the price as well of the stock.
Well, I think on one side, you definitely have higher amount of seat occupancy in the respective routes on which they are traveling. On the other side, the competition pressure is a little less because of some of the competitors are out of the services. So that is definitely a good news for a company like Indigo. And on the top of it, the crude oil prices have remained steady up till now, and as a result of which the price pressure has remained under control. Now, that situation is not likely to remain so. Come winter in the Western world, and you are likely to see the prices of crude oil going up, and as a result of which, I think the fuel price also likely to go up. Given that kind of a situation happening, I would rather like to play a little bit more careful at this point of time. The operation part of the demand part of the situation, I think, remains strong because of the India economy growing. But I think pricing front and the profit margin front, there might be some slippages coming in between. So one will have to be a little bit more careful. As such, this business, I think, is quite vulnerable to many such kind of variables. And that's where probably one has to be very mindful about buying them or buying this business, particularly, I think, when the prices are ruling expensive.
In auto anks versus autos?
Um, of course, I think the choice would remain with auto hands to begin with, largely because of few facts. Some of these companies haven't been performing on the pricing front in the market, yet they are continuing to do relatively better performance, and I think the performance has been quite strong, given the fact that I think their OEMs are actually, I think, showing relatively better result, be it passenger vehicle, be it commercial vehicle, even for that matter, farm equipments, and also the two-wheelers. In each of the verticals in the auto space, most of these companies are, I think, having much bigger business to talk about at this point of time. And that's where probably I believe that I think it's an opportunity for buying into some of the auto ancillary companies. As we read, I think most of the companies are also, I think, significantly some of the companies, particularly the Minda or the Minda corporations, they are also focused on significantly building the ADAS portfolio, which is a value addition in the existing fleet for commercial vehicles at the same time also in passenger vehicles. So I think some of the niche plays are being played out at this point of time, and I think one could possibly go for such names I think selectively to add them into the portfolio now.
So that was about the top recommendations from the auto ancillaries.